Ladies and gentlemen, welcome. Today is the 23rd of May 2021. It's 5 minutes to 9, so markets will open in 2 hours. So this is one of the week overviews. We go through the forward charts of the major markets. Tomorrow on the 24th we have a German and French and Canadian bank holiday, Swiss bank holiday. And then on Wednesday we have the Kiwi rates. On Thursday we have the US GDP Q-on-Q. Alright, so let's go through euro dollar here. So as expected, it did two attacks towards the high, took out stops. Then longies came in at the end of the week and the smart money responded by going down against those buyers, trying to kick them out. But as you can see below the price, we have dumb money, short positions, so this represents a natural support, not a fake support but a real one. So that means, look, the price can consolidate between the buyers on the upside and the sellers on the below the price. Okay, it can go back and forth there, and if the smart money manages to kick out the longies, they can at some point then attack the highs once more, because there's still medium term and long term stops, as you can see. In particular, if longies leave the market and shorties come in, okay, so green bars leave and red bars come in, then the smart money algos would try another attack of the high. So we'll keep an eye on this. Here we see cable. So as expected, it came off the highs, did some kind of forward reversal against those longies, a bit of a dumb money switch going on. As you can see, we also have a similar situation. There are some shorties below the price, and there's still an empty at the high. Tomorrow it will be a slow Monday rangy price action, and then at some point breakouts, and I think cable will just follow euro dollar in such a situation. Next, let's look at dollar yen, 108.92. Looks bearish. Okay, we have longies in the market and the stop here at the low of the 4-hour chart. This is a pullback, but it can retest the lows into the stop at some point, especially if your dollar breaks to the upside, dollar yen can break to the downside. So the general bias stays bearish there. Euro pound looks rather bearish with a stop at the low, so it could go down before euro dollar goes up to serve those longies. Bit of a squeeze can start, so EG is bearish. Dollar cut again came down as expected, and as you can see, the dumb money keeps on buying, so believe it or not, it can again retest the lows and take out long-term stops, so it stays general bearish. Dollar cut, I've documented it in other videos. Australian dollar went down against those longies, but has some shorties in the way at those prices. So it's a bit more complex. It will generally follow euro dollar, but as you can see, the long is above the price. So for example, it can clean the low against the longies, kick out the longies, kick out the stops, go down, and then at some point do a Fisher move up to take the opposite stop. So it's more complex. Don't trade it very confident in any setups. Let's also look at pound yen. Yeah, it looks bearish because it's overstretched. It took out all the upper stops. Has empty stops down here around the 152 level. If longies come in, it will come down, particularly if cable comes down and dollar yen comes down, as I showed before. Next, let's look at Kiwi dollar. Came down, but it generally has a lower bias. As you can see, we don't have any nice stops close to the price. We don't have big dumb money flow, so it will probably go down a bit further, but it's more neutral. That's a great thing about the market causality. You see which markets are neutral and which one have a stronger bias and which are therefore more tradable. So as you can see, when you compare now Kiwi dollar with Kiwi dollar is not the best choice at this point in time. Okay. I wish you a good week. Stay safe.